on the show. Karur Vysya Bank's asset quality improved in the second quarter, while lower provisioning also aided the profit growth. We have with us Mr. B Ramesh Babu, who is the MD and CEO of the bank. Hi, Mr. Babu. Good morning. Thanks so much for joining in. But let's get a couple of basic details out of the way first up. Loan growth. What is the loan growth likely to be for the year? If you could tell us for FY24. And also, if you could tell us, the NIMs, they have come down closer to around 4%. Further pressure on NIMs from year on? What should be the band we should work with for the remainder of this year?
Yeah, thank you. So good morning to both of you. First of all, before I respond to your points, let me share a few things about the bank. And the bank, this year, this quarter, we have crossed the milestone, historic milestone of 1,50,000 crores business. So this last 25,000 crores we could grow in 18 months, whereas the previous 25,000 crore, it was in 50 months. The various initiatives, what we have taken over a period of time are yielding results. That's the reason we are able to accelerate the growth. And next thing is, another historic moment is the highest ever quarterly profit for the bank this year. And likewise, if you look at our ROA of 1.57, it is also highest in the last decade. And last we had in June 2012, 1.53. So that way, there are many good things during this quarter. And above all, the business growth, profitability, and asset quality, all of them are as per our guidance, and we are ahead of our guidance. ROA of 1.57, what I said, even after providing a 25 crore of contingency provision, floating provision, which we thought when the rainy day is there, it will be useful for ECL and those sort of things. That is the reason we have provided. With all these things, also, we have a decadal high as far as the ROA is concerned. Coming to the loan growth is concerned, another good thing we need to note is, at a point of time, bank we used to grow in a skewed manner, a particular vertical used to support and rest of them used to piggy ride on that. Whereas of late, the measures we have taken in the last 2 years, they are yielding results. Now, every vertical is contributing. You can see that RAM verticals, if you see, all of them have given a growth of YOY of more than 15%. So the process changes, product changes, and the knowledge what all is required, everything has been taken care of. That we are able to see in the numbers. Coming to the NIM, if you talk about, so I agree, because we have given a guidance of around 4% for these 2 quarters. We are ahead of that, in fact, 4.07. There is a pressure on the NIM because during the quarter itself, 20 basis points that cost of deposits has gone up, but it has been offset by the yield on advances by 7 basis points. That's why the net effect is around 12 basis points. So coming quarter, we gave a guidance of another 20 basis points. There can be a pressure on the cost of deposits, but it will be partly offset by the yield on advances like 7 to 8 basis points. So that way we expect that the exit quarter of this year, we may be around 3.8% as far as the NIM is concerned, but that is not a cause of concern. The reason is we are planning in a different way. The shortfall, what all is coming in the NIM, we are trying to make it out in the other assets, other income, we are trying to do it. Likewise, credit cost also, we are going to make it up. So that way, we think that 1.6 can be the ROA for the exit quarter.
Okay, right, just one query, sir. On the loan growth for the year will be in excess of 15%?
Yeah, 15% plus will be there. Absolutely.
Okay, got it.
All right, so 1.6% is the ROA of the exit quarter. You're talking about NIMs around 3.8%. And the loan growth, you are targeting over 15% as well. Just wanted to understand a little on the quality of the loan book going forward as well. What is the sense that you can give in terms of further slippages that can happen, the kind of slippages that can happen from the restructured book as well, and your credit cost guidance for the year?
Yeah, so we have strengthened our collection mechanism, and last 1.5 years, internally as well as externally. That is the reason you can see our SMA 30 plus, which we publish in our investment presentation. It is less than 1%. And for the last 1 year, more or less, we are maintaining that. So if you look at it, even if you expect around 25% forward flow is there, so the NPAs may not cross the 1% guidance what we have given. The credit cost guidance what we have given is around 75 basis points for the year. We are very sure that we will be within that. Coming to the restructured book, our bank is having one of the lowest restructured books with 1.2% as the restructured book and out of the 25% already we have provided. But one good thing about the restructured book is majority of the book is on the RAM sector, which is backed by more or less 100% collateral. So even if it slips with a matter of 1.5 years, we'll be able to get back the money. So that way restructured book is not a cause of concern. Our net NPA, if you look at it, it's the lowest again, 0.47. On a 70,000 crore advances book, it is just 324 crores. So out of that, if you look at it, 115 crores is a slippage of this quarter. If you deduct out of the 324 crores, the net NPA would be just 169 crores, and 200 crores provision we are holding in the restructured book that way. So more or less sufficiently we are insulated from all sides.
Okay, all right. What about your recovery from written off accounts? I think it's been in that vicinity of around 50-100 crores approximately. Do you expect more of the same for the year? What could it be? I think last year it was around 200 crores.
Yeah, more or less we are planning for around 250 crore because as you know, we are quite bullish and we have strengthened that particular vertical too. But there are many hurdles which will come up and all when someone finally, if you feel that we are going to fructify that, so some sort of a legal hurdle will come. But all the guns we are firing and all, we are trying to cross around 250 crores plus during this year too.
Right. If you could give us a sense on, the detailed growth outlook for your verticals. I see housing having grown 16% year-on-year, gold having grown almost 20% year-on-year, mortgage has grown 30%, which is where you seem a lot more aggressive, and the others have grown around 7.5% odd. If you could break up your overall loan book guidance of upwards of 15% into these various segments, what would it look like?
No, when you talk about the retail, our focus would be majority on the mortgages. If you see the LAP, which was not moving a part of time because 54% of our branches are in the semi-urban. We found a lot of good opportunity where the pressure is more in the metros. So we started focusing on the semi-urban. We started getting good numbers there with good yields. So we will continue our focus on the mortgages and the jewel loan. And the personal loan front, we have an arrangement with the BNPL with one of the partners with Amazon that is doing well, and we will try to take it forward further. So that is a personal loan portfolio. You would have seen the 13% growth during the quarter is there. So this we are working on that now that we have got some sort of a expertise in handling this. So coming to the overall loan book, when you are talking, our intention is to have a 33% book in the commercial in the sense that up to 25 crore book, where the yields are good and the granular portfolio is there and which is majority collateralized. And agriculture as well as the retail, we want to retain around 22, something like that. And the balance portion of 2021 which comes up, that will be the corporate, because that way we'll give the first preference to the RAM book where the granular portfolio and yields are better, and the balance will naturally go to corporate. Corporate, a point of time, it used to be 45%. We have brought it down to 21% now.
Okay, all right. You're sounding very, very confident, Mr. Babu, for this year. Wishing you all the best, and we're going to be holding you to all these numbers the next time we chat as well. For the time being, we thank you for joining in. Well, let's shift focus to our special